If you're a Gulf national, you can now buy a piece of the world's biggest company for $8.50. That's the price of one share in Saudi oil giant Aramco. It's selling off a 1.5% stake in the company, giving it a market value of nearly $2 trillion. That's worth more than Microsoft and Apple combined.
How do you feel about the condition of the market?
As good as the weather.
The market is as good as the weather.
So very cold.
It's sunny.
It's sunny.
Aramco's IPO is the biggest to date, exceeding the $25 billion China's Alibaba raised 5 years ago. And Saudi Arabia has major plans for the income. The kingdom's keen to diversify the economy and needs the cash to do it.
The revenues from the sale will go to the Public Investment Fund to target promising sectors in and outside the kingdom. The opening up of the tourism sector and the issuing of tourist visas is part of the objectives of our Vision 2030 and is one of the catalysts of economic growth to attract and diversify investments and create job opportunities.
But recent attacks on Aramco facilities have investors worried.
The disruptive attacks on our oil facilities in which Iranian weapons were used shows the level of frustration reached by the Iranian regime, which united the world with this criminal aggression. With the guidance of God and the help of our citizens, we succeeded in restoring production capacity in record time.
The IPO also comes as OPEC members and other major producers hold key meetings in Vienna. As it stands, they've agreed to cut oil production by 1.2 million barrels per day till March 2020. Some members want deeper cuts, but it won't be easy.
There are certain countries within the alliance that are happy with the levels that oil is at right now. I think the most important of these is Russia, and everything we've heard from Russia over the past few months suggests they're not even keen necessarily on extending cuts, let alone deepening them.
Some countries like Nigeria and Libya want to be exempt from the production quotas.
We lost 73,000 barrels a day because of the blockade of one of valves. So we are exempted last year as a month, last time, and we're expecting the members will sympathize with us again for a certainty a little bit.
While OPEC keeps an eye on production, climate activists are watching Saudi Arabia. Aramco is reportedly the world's biggest carbon emitter. That's a reputation the kingdom wants to shed as it tries to attract investment. Reagan Des Vignes, TRT World.
Well, let's talk about what this IPO means for Saudi Arabia and the oil and gas sector in Vienna. Gaurav Sharma, an oil and commodities analyst at Forbes, joins us now live. Thanks for joining us on the program. Well, first off, I want to start off with what's coming out of OPEC meetings. There are reports that OPEC Plus have agreed on additional cuts of 500,000 barrels. This would be one of the deepest output cuts this decade. Would it be enough to support crude prices and prevent a supply glut?
In a word, for the short term, yes. I think what we're noticing here is there's been a fair bit of commotion, and they've all narrowed down to, as you allude to, about 500,000 barrels per day in extension of the cuts. So that would take us up to about 1.7 to 1.8 in the region. Let's see what happens tomorrow with OPEC Plus and Russia. But for now, the price would be supported. The only issue here is that what will the demand be in 2020? Now we've got several clouds on the horizon. We've got the Beijing-Washington trade dispute, the German economy slowing down, India, there's some question marks, and of course Argentina, and of course there's some concerns over the Turkish economy as well. So demand may not be as strong in 2020 as some people are predicting, and this cut, it'll support the price over the short term, but will it last the distance? I seriously doubt it. All right, yeah, speaking of demand, the U.S. is now the largest oil producer, and its production is surging. And we're also expecting an increase in oil supply from non-OPEC countries like Brazil and Norway in 2020. So do you think the age of OPEC is over? That's a tough one to call. I think what we can say is that in a classic sense, OPEC still holds a fair bit of sway in the market, that it can be regarded as a swing producer in the classic sense. But the fact that American barrels have come on stream have made it a fact that the Americans have become a buffer producer. Now, could we call it quits and say OPEC can pack up and go? I'm not so sure about that. But over the next 5 to 7 years, you will see the Americans shift the tectonic plates of the crude oil market. Where we are in that, in sort of the next half decade is anybody's guess. But OPEC's wings have certainly been clipped a bit.
Let me get back to the Saudi Aramco IPO. How much is that playing into the decisions that we're seeing coming out of the OPEC meetings this week?
See, it's interesting you bring that up. For 3 years ago, we came to this place and we were told that we're going to have some deep cuts to rebalance the oil market. Precisely 3 or so years ago, the Saudi Crown Prince, Mohammed bin Salman, declared his intention that Aramco should go to IPO. So there is an overlap in the nature of these cuts and the duration of these cuts and it seems like the endless amount of time that we've talked about this IPO and it's finally happening. So there is an overlap. What I suspect is that OPEC Plus will do a bit of lip service and say that they're going along with OPEC to rebalance the market, institute the cuts, and that would substantially, I think, support the price for the next 2-3 months in the time that the IPO makes its debut. But yes, they do seem suspiciously connected.
All righty, well, we'll have to see what comes out of the OPEC Plus meeting on Friday. Gaurav Sharma joining us live in Vienna. Thank you for your time.